Good afternoon, everyone. Today is Friday, the 9th of December, 2011. This is Brian Shannon from Alphatrends. Let's take a look at these markets here. Let's pull up that table of percent changes first. You can see for the week we were up about 1% on the SPY, the NASDAQ about 3/4%. Russell 2000 outperformed a bit in some of these other markets. You can see, well, we did close. Year to date positive for the S&P 500, which we haven't really done in a while. Of course, 125.75 is the level that we had started the year at or closed last year at. This is also the volume weighted average price that we're looking at right now, which is approximately 125.30. So the average price is that this market has traded at is very close to the level that we started the year at, and very close to the level we're at right now. The big battle this week was with this 200-day moving average. We keep coming up to this 200-day moving average and have closed above it a few times in the last 6 weeks or so. And it was nice to see a good recovery today because, excuse me, on Thursday we did breach some support and made a lower low underneath that 5-day moving average. Today we kind of fought that 5-day moving average for a while, but we're able to close above it with some late day strength here. It's just a nice gap up and just kind of grind higher throughout the session, but above that 5-day moving average. Now we're still kind of trapped in this little range here, and you can really kind of now define it as basically 124 up to 127. Of course, we got down, maybe I think today's low is about 123.60 or so. But we're still in that range. But the good news is that we're working on breaking, building out of this neutrality or building more neutral for a potential continuation higher. We've got a rising 10, 20, and 50-day moving average. That's somewhat negated by this declining 200-day moving average, but it becomes a lot easier to look at this market and say, next week we have the possibility, and then for the next 2 weeks we have the possibility that we could break some of this resistance and perhaps even see, well, I don't know about new highs for the year. That seems kind of far-fetched, but maybe a move up towards 131 or so even would be, that would be a nice 5% move from here. But this, the good news about the pullback on Thursday is that it was really pretty shallow and contained, and we recovered so quickly from that. So that's the good news. Next week we're going to want to keep an eye on this 124 level. I think that in really the low, which was made yesterday about 123.60, but we want to keep an eye on the lows that we made this week because we've really absorbed that big gain we saw 2 weeks ago very well in here. Again, if we look at retracement levels and we take a look at what this market has retraced off of this large rally, we didn't even get down to a 38.2% retracement of this move from 2 weeks ago, Friday, to yesterday's lows. So pretty impressive and encouraging as far as the potential to continue higher next week. NASDAQ continues to look really like a big giant mess here. If you look at it from the year-to-date perspective, and we're just kind of back and forth, in these big ranges. We are holding above that 200-day moving average. We got the 50-day to cross up through the 200-day. A lot of people get excited about that. That's what they call a golden cross. I don't put a lot of weight in it. For instance, this is sort of the bearish cross here. I'm sorry, back in, where was it? Well, when the 50-day crossed the 200-day, I guess I'm gonna have to go to a weekly time frame. So somewhere back in here was what they call the death cross. Now there was a sell-off, obviously. After that, but like any technical indicator or event or any such thing, you don't want to put too much weight in one thing. You have to look at the big picture and say it still remains a pretty darn choppy mess in here. And back to the idea of not putting too much weight on in any particular technical indicator like a 200-day moving average. Closing above it, we've done that. Is not a big deal. We've closed these 3 days above it back in October and November, and that didn't lead to a massive turnaround. And I don't think closing above it will lead to a massive rally this time either. But maybe up towards that 131 makes sense. The Nasdaq, like I said, though, is a little bit different story because it's just so choppy looking. One of the big components of the Nasdaq is, of course, Google. And Google is pretty impressive here. I tweeted about this today. Let's just take a look at it because I didn't show the chart. But you can see here for the last couple of years that this really 625 to 630 has been a pretty impenetrable level of resistance. In the highs back in January, we'll take a look in here. Was that January? It was January 642.96. Anyway, if you take a look at the monthly chart and you look at the level that we've been kind of consolidating under, what we've seen is this big pullback, a rally up to six. Let's just call it 630. It pulled back down to 450. The buyers took control. It took a little bit of time to try to work through that 630 level. A higher low again, another higher low after getting rejected, and this time on the daily chart, you can see that we've created this nice little flag right in here, and today we kind of moved out of that. So Google looks like a stock that, in particular, if it doesn't break below this week's low of about 615, that it looks poised to break out. If it could break out beyond, let's just say 650, it looks like a clear shot to me, a pretty quick shot, likely up towards 700. And that's not really even a big percentage move. It sounds like a lot. Let's just call it 650 to 700, but that's not even 10%. So 640 to 700 would be 10%, and that's not a huge move. But Google is the type of stock that it starts breaking out. A lot of other stocks are going to, they are starting to look a lot better. In fact, it's amazing what 2 weeks can do. That we closed on those lows 2 weeks ago. We still have all the headline risk. Nothing's solved worldwide as far as the global economic problems go. But we're showing better signs, and that's we have to take it as it comes and what the market gives us. The Russell 2000, having a little trouble with the 150-day moving average, and which moving average do you look at? Well, it's kind of like drawing a trend line. You want to capture the essence of trend. Which moving average is currently offering resistance and has been offering resistance? So the market seems to be saying the 150-day or 30-week moving average is important right now in the Russell 2000. We see that this bigger level up in here, the support that was broken earlier this year and did act as some resistance near about 77, is approximately the location of the 200-day moving average. 76.75 is the 200-day moving average, and we had again a little shakeout in here, below some important support, but now the big level held of 72, 73 broke down, and we rallied nicely. So on Monday, maybe we pull back a little bit would be nice, kind of let this market pull back a little bit more and then go. But you have to be ready to be and willing to move quickly. If this market breaks beyond that 75.5 level, I think you've got a quick shot up towards 77. The semiconductors broke their important level of support and closed below it on Thursday, but you can see we recovered nicely. This 30.5 level looks like a little shakeout below it. So this week's low is going to be important, just at about $29.90 or so. This one's not as recovered as the other markets, so kind of keep an eye on that. We want to see it really hold above 30.5, so maybe a little pullback and then push above that 5-day moving average would be nice. And by the way, let's go back to the SPY for a moment, because it's good to see in here as well that Thursday's pullback, we still held above that rising 10 and 20-day moving average. So that's, those are good constructive signs. But the semiconductors really, the bigger level of resistance, 31.5, and then up towards 32.60 or so. So I don't think this group has the best trading option right now. And you can see again that 30.5 level, 30.60. We've had some support levels in here. We're trying to get back above. The impressive thing this week for me was, and a lot of people I think, was that the financials were able to hold above that $12.80 level. That's been a level that we've been observing for a while here, as it broke that bigger support back in January, led to the sell-off. It was resisted slightly, and then we pulled back almost to the pennies in here, within a few pennies of that $12.80 level. In fact, let's just take a look for the week. Where do I get that? Hold on. right here, double click on that. And for the week, the low was 1278. So we went 2 pennies below it. Probably some people who take that number literally, meaning, oh, if it gets below 1280, I'm going to short the world. And then it was just enough to, trap in some shorts and get rid of some stops underneath there. It's not, from failed moves come fast moves, and we always want to be careful around those widely watched numbers, especially after it's come from 1340 down to 1280. It just had a pretty decent little percentage drop. So selling short below that doesn't a lot of times make sense. Sometimes it does, of course, but then you look and you see, well, we've got a 10, 20, and 50-day moving average kind of in this level area as well, with a 10-day moving average crossing up through the 50, the 20 just below that. So there are encouraging signs in this market, but we have to look at them as just encouraging signs, because all these markets are still really broken. I mean, you look at the Nasdaq, just a giant mess. It's a giant mess though underneath a very important multi-year, close to a decade level. So it's always going to be an interesting week next week, and once again, this market has proven that you have to remain flexible and keep an eye on those key levels of support and resistance, and base your risk around those and what you're comfortable with. That'll do it. Thanks for tuning in, and have a great weekend.